All right. So, welcome to CA Final Financial Reporting classes. I'll first take you through today's session. Would not be too long, with an intention that just to understand each other is what my intention here is in this session, and to give you background of how the subject flows over the next 2-3 months. That's the idea with which I want this session to happen. Typically, the actual classroom session would eventually start tomorrow, but today is only kind of a icebreaker, and also to give you an understanding of how each concept will be dwelled into. That's the idea with which this session is being done. So first of all, let's understand what topics you have for CA Final in financial reporting paper, and then take it forward from there. Number one, the syllabus wise CA Final Financial Reporting paper is only about Ind AS, is all about Ind AS, and also at times he deviates and asks about what's there in IFRS. He deviates and asks about what's there in IFRS, which is a rare occurrence. And apart from that, extremely rare is asking in comparison with AS, which I would say is next to zero, but still there is a very bleak possibility for that to happen. So when I say Ind AS, every Ind AS in existence right now, is being questioned here. When I say every Ind AS in existence, something which is already in practice. Say for example, there are few standards which are already there but not in practice. Okay, such standards are not part of your syllabus, but other than that, yes, everything is the same. And another important question what students generally ask is, sir, I have been part of the old syllabus. Okay, old syllabus. If I am converting into new syllabus, what would be my syllabus? Fairly speaking, when you compare with your old syllabus and new syllabus, 1-2 topics have been removed. Those topics are, in old syllabus you had something called as integrated reporting. Guys, request you to mute Subbu. Yeah. Integrated reporting you have, and then you have something called as CSR. These two topics which are there as part of old syllabus, which used to weigh somewhere around 5 marks out of the total paper. In the new syllabus, it is not at all there. Okay. So this is what the difference between old syllabus and new syllabus. Earlier there is something called integrated reporting, which does not exist now, or corporate social responsibility, accounting and all reporting, which used to be there in the past. Now it is not at all there in the new syllabus. When I say new syllabus, it is about May 24 attempt onwards. It is not at all there. Okay. Now, coming to the standards, what would be the approach for each of these topics is something which you should know. Approach wise, since Ind AS is new to you, I will have to take you through the roadmap through which the Ind AS are built. Okay, I will be taking you through the roadmap Pardon if you are able to listen the dogs barks. Okay, the roadmap as to how Ind AS came in India, and then there is Schedule 3. Okay, and then you will have to know about Ind AS 1. Ind AS 1. And then we will go through the framework. That is, in Ind AS 1 you have something called as framework. After that we will move to share-based payments. After that we will move to share-based payments, which is the next standard, important standard there. And once we are done with these two basic topics, then we will jump into financial instruments. Okay, and then we will go to business combinations and consolidation. Okay, and finally all other standards. This is the sequence in which I would be covering. But nevertheless, at times what happens is few sessions when there is a limited time available, I'll try to finish off small standards whenever there is time permissible. Okay, so but in principle this is the flow in which our the entire sessions would be taken up. Okay, and if you look at the weightage which was given in the past, for these for the sequence which I have given down, roadmap, Schedule 3 and Ind AS 1 typically is for 5 to 15 marks. Share-based payments used to be for 10 marks somewhere. Okay, and then financial instruments is a extremely important topic where 20 marks used to be asked. The reason why I am saying used to be asked is it's in the old syllabus. In the new syllabus which we are now entering into, unless until we get to see the paper, I do not know. But this is how the questions used to be asked. Okay, and then business combinations is again another important aspect where 20 marks, up to 20 marks used to be asked, business combinations and consolidation together. And rest all used to be for another 50 marks. Okay, so this is how the paper used to be in the past with respect to old syllabus, where integrated reporting and CSR also used to be there. But in the new syllabus you don't have that at all. So my gut feeling is that extra 5 marks which is part of integrated reporting and CSR, I feel it would get categorized into other standards. The thrust will be on other standards is what I personally foresee. Okay, and if you look at the examination questions, the pattern is such that the pattern in the old syllabus is such that it is more of conceptual testing even in the recent past. However, though it is conceptual testing, roughly around 60 to 70% of the questions are either directly lifted from institute study material or it is lifted from your past exam questions, RTPs, MTPs, with slight number changes. So what I am trying to convey here is the questions, it could be 4 mark question, 6 mark question, 8 mark question, or 12 marks, 16 marks. It could be anything. Most of the times, maybe it could be ranging between 70 to 80% also instead of 60-70. Most of the times the questions are either study material, RTP, MTP, or your study material book back questions. Okay, these are predominantly being tested. Now if I go through only these, is it sufficient, sir? Next question. I wouldn't say this alone would be sufficient. At times it is important for you from conceptual understanding. See, the very purpose of the classes is not only for qualification in the examination. The purpose is when you pass through CA final, you should be in a position where you should be able to handle a IFRS company or an Ind AS company. Once you go through the entire subject, at least you should be able to understand what seniors or experts are talking about it. So for that to happen, our coverage in the classroom would be, along with these aspects, along with these 4 items, I would also be taking you through, there is something called as, there is a compendium, okay, of Ind AS, which is given out by MCA, Ministry of Corporate Affairs, okay. So this will give you details of what all notifications MCA has come up with on Ind AS. We will be covering those. Apart from that, there is some educational material, okay, educational material clarifications which are given out by Ind AS Technical Facilitation Group, okay, clarifications given by Ind AS Technical Facilitations Group. Those also we would be covering. Apart from that, you should also know globally what is happening, for which we will be going through IASB, International Accounting Standards Board material. Okay, we will be going through IASB material on IFRS. So broadly, this is the coverage what we intend to do for each of the standard. Okay, and if you ask me how the flow happens for each of the standard, how the flow goes. For each standard, first we will understand it conceptually, and then we will go through study material problems. In fact, even before study material problems, there could be few self-help questions which we will be discussing in the class. Okay, self-help questions, that means these are more of concept builders. You should be strong with your concepts, only then you can go to institute study material problems. Okay, so self-help questions which will allow you to build the concept in your brains. Okay, and then study material questions, and then if there is any unrepeated RTP question other than study material question, RTP, MTP questions, okay, those we will go through. And then if time permits, I would do in the classroom itself any IFRS related questions. Okay, but if I feel the topic is getting dragged too long, what I would do is, I might not do it live for you. I will record the entire session along with the questions and answers and give it for you for for your own watch. Okay, that's the intention with which I would like to work here. Now, having said about this, the classroom session, I have initially planned it somewhere around 250 hours. Okay, 250 hours is what I feel it would definitely take, and I'm very much in the track only. Okay, now, but to do this 250 hours, I would be taking almost like 2.5 months. Okay, so for ease or for comfort of students, what I would do is, Maybe I will restrict live sessions to 2 months. That means somewhere around 60 to 70 sessions, live sessions. And the rest I would try to give it out as recorded sessions for you, so that you can go through the questions for yourself. And that is that particular topic questions where you would not need live interaction with me. Anyways, for recorded students, it's a different story. It's all complete without interaction, but you can anyways message me on WhatsApp or keep calling me. But for someone who is attending live, idea is out of this 250 hours, mostly around 200 hours will be live for you. Remaining 50 hours would be given as recorded for you also. Okay. So somewhere around 2.5 months is what I envisage to finish off the entire syllabus in. But if it gets dragged also, it would not cross beyond 3 months. Okay. So this is the background as to the coverage, what all we would be doing for each of the standards. Now, coming to the subject, let's now begin with the first part, that is roadmap. In fact, before going into roadmap, you should understand the sequence in which the standards exist for you in Ind AS. Ind AS standards, if you see, the standards are broadly categorized into 3-4 varieties. Okay, 3-4 heads in fact. There are few standards which are completely on presentation. There are few standards which are completely on presentation. So what kind of presentations do we have? There are few which talk about how a cash flow statement should be. Okay, there is something which talks on how interim financial reporting should be done, or your the regular presentation of financial statements, how it should happen, Ind AS 1. Okay, all these are presentation standards, how you should present your financial statements. That is something which is explained in it. So these are a group of standards. Then you have few standards which only talk about measurement. Okay, second is about standards which talk about measurement. In presentation, Ind AS 1 talks about presentation of financial statements, and then you have 7 which talks about cash flow statement, and then you have 34 which talks about interim financial reporting. Okay, these are which will take you through presentation, how you should present your financial information in the financial reporting. When it comes to measurement, these talk about how my various events should be measured in the financial statements on the balance sheet date or on the financial reporting date. At what value should you show? Okay, that is why you call it as measurement based standards. It talks about value to be reported. Okay, the first one talks about how to report. Okay, so value to be reported. Again, you have 3-4 standards which are into this. For you in your syllabus wise, if you see, there are again only 3 standards which talk about it. Ind AS 8, which talks about accounting policies, changes in accounting estimates and errors, which is almost similar to your erstwhile standard in AS. What you have in AS, similar to that is what you have here. And then you have Ind AS 10, which talks about events occurring after the reporting date. And then you have fair value measurement concept standard, that is, which is 113. Okay, so this is the second category of standards what you have. The third is with respect to assets. Okay, assets in your financial instruments. So now when I say assets, there are assets which are current assets, there are assets which are non-current assets also. And then in your non-current assets category, there are assets which are tangible, there are assets which are intangible. Again, assets and these tangible assets, intangible assets, how they should be impaired in case there is any impairment to be done. So like this, there are varieties of standards which are mentioned under assets category. Okay, so under assets, if you see, we will be talking about PPE, that is 16, Ind AS 16, and then you have inventories, Ind AS 2. Okay, then you have intangibles 38, there is 36, impairment of assets. Okay, and then you have very important new concept standard here for you, which talks about investment property. That is also a non-current asset. Okay, which is in Ind AS 40, and then you have standards relating borrowing cost. Okay, borrowing cost falls under 23. Okay, because to what extent interest has to be capitalized, borrowing cost should be capitalized. That is also part of your non-current assets only. That's why you should know about that. And then there are assets which are leased out also. Okay, when it is leased out, how would you deal? In which case 116 should be understood. Okay, like this, there are varieties of standards which talk about only the assets part in the balance sheet. Okay, and then you have standards relating to your liabilities. Okay, when I say liabilities, it is more on what amount of liability should be shown in the balance sheet. Okay, what amount of liability should be shown in the balance sheet is what it talks about. So there are liabilities relating to employee benefits. Okay, 19 talks about it, or else 37 talks about provisions, contingent liabilities and contingent assets. Okay, so these are from liabilities perspective. And then you have rest. When I say rest, there are standards which talk about how revenue should be recognized. 115, revenue recognition. There are standards which talk about deferred tax calculations. 12 talks about deferred tax, income taxes calculation. And then forex, there is a separate standard which talks, okay, on how accounting on forex should be happening. So these are various standards which will be going through in rest of the standards. Okay, so broad classification of Ind AS, what you have is going to be on presentation, measurement, assets, liabilities and rest. Okay, so these are the 5 categories in which the standards would be covering, and these are something which we will completely follow. Okay, now having said about the standards coverage, now let's get into the roadmap for Ind AS. Roadmap to Ind AS. To go there are few things which I should take you through about the past events which have happened in India. Initially, until 1980s to 90s, India never felt the need to have accounting standards which are in line with international financial reporting standards. until 1980s to 90s, there is no need for India to have standards which are in line with international reporting standards, financial reporting standards. Why? Because our geopolitical environment is such that the entities in India were transacting more with within the country. It was the transactions were not outbound at all. For those reasons, till 1980s to 90s, there is no requirement to have international financial reporting standards. But during 1990 to 95, during the partnership between Manmohan Singh and P.V. Narasimha Rao, that was the time when they have made the economy global. They have asked international entities to enter into India. They have asked partnerships from across the globe to participate in Indian economy. That is when entities like people coming from Japan, China of course they just came and left off, and then US, UK, all these countries started having their subsidiaries or various entities in India. They started their investments in India. Now once this came in, excuse me, so once this started, the difficulty what they saw is, in India we have a set of accounting standards. But globally there is something else which is being followed. It could be IFRS, it could be in Singapore there is Singapore accounting standards. Japan has its own set of accounting standards. Like that, every country has got a different set of standard. But the beauty about all of them is they are somewhere aligned with IFRS. They are somehow or the other aligned with IFRS. Now the concern what came is, an entity which has got a holding company in UK having its subsidiary in India is not able to align its balance sheet P&L in India with their US entity, because the revenue recognition principles could be different here, the assets recognition principles could be different here. These financial statements don't exactly align with how it is being done internationally. With this challenge, during 1990s, India woke up, understood that there is a need to ensure that there should be some standards which should come out, which are in line with international accounting standards, but it need not be for every entity in India. That is when they formulated a study circle till 2000, and they stated there will be new set of standards called Ind AS. However, these standards will be made applicable only to large entities. Is what they have initially proposed. Now, what do you mean by large entities? Another question. I will explain that little later. So I am taking you through year wise. So initially 80 to 90 there are no separate set of standards. Then discussions happened. By 2000 they understood that there is need for new set of accounting standards which are for large entities. Now from 2000 to 2010, ICAI, in alignment with MCA, Ministry of Corporate Affairs, came up with this Ind AS. By 2010, the standards were formulated. They are made available for implementation. But once the standards are ready for implementation, it should pass through both the houses of parliament. It should pass through both the houses of parliament. Only then the standards will come in act. Okay. Now for that to happen, these Ind AS were proposed in both the houses. That is when CBDT came in picture. Okay. CBDT came in picture and said, look, there is a standard which talks about income taxes. Okay. There is a standard which talks about income taxes. So that particular standard we will have to go through very detailedly, because in India right now we have AS 22. Now you are talking about another standard called 12. Okay. This 12, I need to understand how it flows. For those reasons, CBDT said we will have to completely review the standard, only then we can give you a confirmation whether this standard is good to go or not. Okay. Now, that standard completely, Ind AS 12 is hardly a 20-page document. The standard completely is a 20-page document. This 20-page document, it took CBDT to completely go through and came out with a review stating that it is good to go. It is good to go after 4 years. It took CBDT 4 years to give an assent, saying that yes, this standard is okay to go. Hence, what has happened is, by 2014, the standards are set to release. By 2014, the standards are set to release. Hence, by 2015, we took it as an implementation year. We took it out as an implementation year. That means the standards wise got launched by 2015. However, effective date of implementation happened from 1st of April 2016 only. Effective date of implementation started only from 1st of April 2016 only. That too, there is a phased manner in which it is implemented. There is a phased manner in which it is implemented. Now, before we go to that phased manner of implementation, there is something else you should know. What is it? It is about Ind AS versus IFRS. It is about Ind AS versus IFRS. Is there any difference between Ind AS and IFRS? Is the first question which comes. First of all, differences wise, there are slight differences, but conceptually both are almost the same. Conceptually both are almost the same. How does that work? There are two ways in which IFRS are generally adopted. Okay. The first way is adopt IFRS as is, on an as is basis. That means as it is, whatever is there in IFRS, the same standard I will apply in my country. There are few countries who have done that. You go to Arab countries, they don't have another set of accounting principles. They just follow IFRS as it is. Okay. But there are countries which decided not to adopt IFRS as it is. What are those? That is second category. You will come out with your own set of standards. You will come out with your own set of accounting standards in that country, but conceptually they will be aligned to IFRS. Conceptually they will be aligned to IFRS. Okay. So what is important for us to understand is, there is no requirement that always, if a country would like to bring in IFRS accounting standards, it should adopt them as it is, no requirement. Okay. You can create your own set of accounting standards, which you may name them whatever you want. In India, we called it as Ind AS, Indian Accounting Standards. Okay. And these standards are conceptually nothing but IFRS, but there are few differences. Okay. Now, what differences exist is what you need to understand. Number one, terminology changes. Terminology changes could be there. Okay. Number two, carve-ins. Number three, carve-outs. Now, what does a carve-in mean? What does a carve-in mean? That means something which is not there in IFRS, but it is there in Ind AS. Okay. So what it means is, there is a restriction of opinion given in IFRS. Okay, restriction of opinion is given in IFRS. However, in India, you elaboratedly explained something about it, or you made it even more clearly understandable in Ind AS by giving some additional info over and above what is there in IFRS. Okay, then you call it as carve-in. That means in every standard, when you go through the standard, there would be few items like carve-ins and carve-outs for you. Okay. Now, that is about carve-in. That means something which is not there in IFRS, but it is there in Ind AS. Second is carve-outs. What a carve-out means, carve-out mean, under IFRS, there is something which is conceptually there, but I am different from what is there in IFRS. I am different from what is there in IFRS. That means I am conceptually different from what is there in IFRS. Okay. So you can put it as conceptually different from IFRS. Okay. So broadly, these are the only three differences which can arise in your Ind AS and IFRS differences. Okay. Now, having said about
is something which is in IFRS, not in Ind AS.
Which one?
Carve-in.
Carve-in is, yeah, which is not there in IFRS, but it is there in Ind AS. That is why I have mentioned it as restriction of opinion given in IFRS. That means they did not elaborately explain in IFRS, but it is there in Ind AS.
Okay, yes, sir. Okay.
Yeah. Okay. So this is broadly about how it is different between Ind AS and IFRS. Okay. Now, having said about this, now let's go through the implementation phases, what have happened from 1/4/2016 till date. Okay. For that to make you understand, you should understand that companies to which Ind AS is to be adopted are broadly categorized into three. Okay. Number one is banking companies, second is insurance companies, and then others. Okay. In fact, there is also NBFCs, okay, I would put it as banking and NBFC. Okay, banking companies and NBFCs, insurance companies and others. Right now, I will only talk about other companies. Okay, I will only talk about other companies first. With respect to other companies, MCA stated that if your net worth is X, by so and so date you should have started adopting Ind AS. If your net worth is below some X or above some X, you should implement Ind AS by so and so date. This is the sequence in which Ind AS adoption happened in India. That means there is a phased manner of adoption. Phased manner of adoption for adoption of Ind AS in India with respect to other entities. Okay. Now, what phased manner happened? Phase 1 is for large corporates. Large corporates. When I say large corporate, I mean to say that if the net worth is greater than or equal to 500 crores. If the net worth is greater than or equal to 500 crores, I call it as a large corporate. For such entities, the adoption date happens to be 1/4/2016. Okay, that means for the financial year 16-17, for the financial year 16-17, you should prepare your financial statements using Ind AS. Adoption date is 1/4/2016. Okay, next, phase 2. In phase 2, all listed entities and unlisted with net worth greater than or equal to 250 crores. With net worth greater than or equal to 250 crores. For these companies, the date is 1/4/2017. That means financial year 17-18 should be under Ind AS. Am I making sense, people? Okay. Now, another important aspect here which you should understand. When I say financial year 16-17, generally the financial statements under Schedule 3, what will we do? There would be particulars, there would be FY 16-17, that is current year, there would be comparable data which is 15-16. Yes or no? That 15-16 also should be in Ind AS, otherwise how will it be comparable? Okay. For these reasons, if you are required to adopt Ind AS for a particular financial year, your effective date from which you should be following Ind AS would be the previous year's first day. The previous year's first day. Am I making sense here? I will repeat this once again. Please see. Phase 1. Financial year 16-17, you have to adopt Ind AS. If you have to adopt Ind AS, that means your financial year is 1/4/2016 to 31st March 2017. This is your financial statements column. Okay, this is particulars, financial year 16-17. Comparable is to be 15-16. No, you cannot present 16-17 under Ind AS and present 15-16 old data using AS. These two are not comparable. Hence, what you should do is, you should prepare Ind AS, you should prepare 15-16 ka data also. You should restate, in fact, you should restate 15-16 data which is earlier there in AS under Ind AS for comparison in 16-17. Okay, this should be restated into Ind AS. Okay, this is second important thing. Third important thing, whenever you are adopting Ind AS, there is a effective cutoff date from which Ind AS is adopted. There is an effective cutoff date from which Ind AS is adopted. That effective cutoff date, again take the same financial years. Let's go with the same financial years. Effective cutoff date would be from 1/4/2015 here. Why? Because whatever data you have in the past, you are presenting 16-17 financial year under Ind AS, for which you need past data, last 1 year's data also under Ind AS, that is 15-16. If I have to prepare 15-16 ka data also under Ind AS, I need the first day of 15-16 to be my first Ind AS event date. Okay, so 1/4/2015 also you will have to give the numbers which are there in your financial statements under Ind AS. Okay, so these are the three important aspects. Anyways, this part we will see again when we go to that particular standard, that is first time adoption of Ind AS. But since it is roadmap, I have just taken you through this here. Okay, so this is what we are supposed to go with respect to implementation for other entities. Okay, now let us come to banking companies first. Okay, for banking companies, initially they said Ind AS would be applicable from 1/4/2018. Banks did not get ready. They said 19. Again, banks are not yet ready. Hence, RBI stated that it is deferred till further announcement. So that means today banking companies have not yet adopted Ind AS. But please note, the moment banks adopt Ind AS, at least 20 to 30 banks ka performance in stock market will crash down. Reason being, their financials, the strength what they are showcasing, stating that they have lots of financial assets by giving loans and all, everything will reduce, because the NPA provisions what you would have learnt in your intermediate about banking companies, saying that if the asset given, the financial asset is between 3 months to 9 months, all that classification does not exist in Ind AS. The moment it is not performing for 3 months, out. It is bad debt. It is considered as provision for bad debt only. So not 0.25%, 0.4%, 40%, nothing like that. Direct straight delete. Whenever it is recovered, that's all. So once that provisions come in, banks will have a really tough time to prove that they are, they would be able to recollect every penny which is given out as loan. For these reasons only, technically, RBI is pushing the adoption date. Okay. Then when it comes to insurance companies also, similar situation happened. They initially stated on 1/4/2018 it would be launched, but it did not happen. 20 they have announced, again it did not happen. Okay. Now coming to NBFCs, look at how strategically RBI has planned. For an NBFC, they have announced dates because that is private. NBFCs, RBI has announced dates. there are NBFCs following Ind AS, but for banks they did not. Reason being, public sector banks also exist in India. Okay. Now, with respect to NBFCs, if you see, again there are two phases in which it happened. From 1/4/2018, if the net worth is greater than 500 crores, they are supposed to adopt. Okay. And from 1/4/2019, if you are a listed entity, mandatory. Okay. If you are unlisted but having greater than or equal to 250 crores, again it is mandatory to adopt Ind AS. Okay. So from this entire understanding, what I would like to convey to you is, banking companies is a different story. Okay. If you are an NBFC or if you are other entity, and if you happen to be a listed entity today sitting in 2023-24, it is mandatory for you, for every listed entity, to prepare financials only under Ind AS. Listed entity, by default it is mandatory. For listed entity, you don't have that clause called listed greater than 250 crores. Every listed entity, your net worth could be only 10 crores. Your net worth could be negative. Even then, Ind AS adoption is mandatory for listed entity. But other than listed entity only, this net worth clause comes in picture. Okay. So what has happened is, in a listed entity, if the net worth happens to be above 500 crores, and if it happens to be other than NBFC, the implementation date happens to be 1/4/2016. However, if the listed entity, even if it does not have net worth, that means if the net worth is negative also, by next date it should happen, it should implement, that is 1/4/2017, it should implement Ind AS. Okay. So these are few aspects which you should be cautious about whenever you look at the parameters as to when Ind AS is applicable to an entity. Okay. Now, in this, we have used multiple words. Okay. We have used a word called company. We have used a word called net worth. Okay. Now let's understand what a banking company means, what an NBFC means, what a company means, what net worth means. These words should be defined first. We should have a clarity on these words. Okay. Let's first go to the word called net worth. Excuse me. Now, what do you mean by the word net worth? This net worth, should I calculate using Ind AS parameters or AS parameters? As on what date should I calculate this net worth? All these questions will come. Okay. When I say net worth, it is as on the last reporting date. Okay. Last reporting date of preceding financial year. Preceding financial year. What does this mean? It means that, say, for my entity, Ind AS is applicable from 1/4/2017. Just assume that it is applicable from 1/4/2017. Okay, in which case you should look for the net worth as on net worth to be looked for as on 31st March 2017, because for 17-18 financial year Ind AS is applicable is what you are saying. What is the basis for you to decide 17-18 is the financial year from which Ind AS is applicable? Based on the net worth as on 31st March 2017. Am I making sense, people? Okay. So first clause what we have looked for is as on what date I should look for that net worth. Next, second, calculation of net worth. What components are part of my net worth? Okay. Number one, paid up capital. Paid up capital. Okay. Number two, reserves out of profits earned. Okay. Number three, securities premium. Number four, P&L credit balance or debit balance. If it is debit balance, you will have to deduct. Okay. Number five, accumulated losses and fictitious assets to be reduced. Okay. Now, what are these? Let's understand part by part. Let's understand this part by part. Paid up capital. When I say paid up capital, it could be equity or preference. When I say paid up capital, it could be equity or preference. Okay. Next, reserves out of profits earned. When I say reserves out of profits earned, there could be general reserve which is created. There could be employee stock options reserve which is created. There could be any other reserve which I have created. All of these can be considered as reserves made out of profits earned only. Then, if you have securities premium on shares issued, that can be considered as part of your net worth. Okay. Most important thing, P&L debit balance or credit balance. If it is credit balance, you will add to net worth. If it is debit balance, you will deduct from net worth. There is something which is known to us. Okay. Now comes the most important thing, accumulated losses or fictitious assets to be reduced. What this means is, if you have created revaluation reserve, is it a reserve out of profits earned? No. It is a balance sheet uplift, facelifting. That's all. It is not something which is really earned. Revaluation reserve, it is not real profit which is earned, so I cannot add it as part of my net worth. Then you may be having some amalgamation capital reserves. There could be amalgamation capital reserve in your balance sheet. Recollect AS 14. in your intermediate, there is something called AS 14, in which in the purchasing company, in entry 2, under purchase method of amalgamation, do you recollect or not? Purchase method of amalgamation, there is something called goodwill or capital reserve which will get created in entry 2. Okay, so I am talking about the capital reserve created under amalgamation. Is that really a profit made out of business? No, that is a profit made out of purchase of a business. I am not talking about that here. Okay, so such aspects you cannot consider as part of your part of your net worth here, because that is not reserve made out of profits earned. Okay, then if you have any write back of depreciation, why will there be write back of depreciation? Because there is value in asset created. There is a creation in value for the asset already in existence. When will this happen? If the life of the asset improves and you feel that the asset still has got a larger life, hence you are adding back the depreciation what is already charged out to P&L. So these are aspects which cannot be considered as part of your net worth calculation. Am I making sense? Okay. So these are few things which you should be cautious about. Then, so fictitious assets. So why I have stated fictitious assets is because the write back of depreciation and all, it creates an asset in your balance sheet, but it is not really an asset. Okay, it improves the value of an asset because of write back of depreciation. Is that really in existence? Actually no. Okay, so any such fictitious additions should be deducted, then you get something called as net worth. This is the methodology in which you should calculate net worth. Now, all this is fine, sir. Are these items as per AS or Ind AS? Okay, number 3, AS or Ind AS. First of all, you are looking for this parameter on a date when Ind AS is not at all there. Yes or no? You are looking for this parameter on a date when Ind AS is not at all there. Then how can you expect the financials to be in Ind AS? Conceptually wrong question, but it is to confuse you. Am I making sense? Conceptual wrong question, but it is only to confuse you. I will repeat this once again. You are right now testing net worth on a particular date. That is the last date of the preceding financial year. Last date of the preceding financial year. Now, as on this date, you are checking for net worth. This is the parameters using which you will check the net worth. Till then it is fine. First of all, as on 31st March 2017, you don't have Ind AS, no. There is no point asking whether it is under AS or Ind AS. It is by default AS only. It is only to confuse you. They would twist the question and ask whether it is under AS or Ind AS. There is no Ind AS as on that date. It is only AS balance sheet. Okay. So these are few things which we need to consider when we look for, how to adopt, how to calculate net worth. Okay. Now, let's go to company. Now, when I say company, there are two categories which we are required to look through. One is listed, second is unlisted. I'm only talking about other category, other companies category. Okay. Now, when I say listed, not every entity would be considered as listed. Okay. There are few exceptions. When I say listed entity, if its equity instruments are getting traded in stock market, then Ind AS is by default applicable. Then Ind AS is by default applicable. There are different varieties of listed entities. Okay. Number one, equity instruments are traded in stock market. There are few other categories where it is considered as listing, but it is not about equity instruments. There could be redeemable debentures or redeemable preference shares traded in stock market. Okay. Then there are instruments, that is equity instruments listed in SME platforms. That means there is something called SME listing in Bombay Stock Exchange. Small and medium enterprise also can enter into publicly traded platforms, but it is not a large cap company. They are small and medium companies, in which case I call it as SME listing. It is called as SME listing. Now, if the equity instruments are listed in SME platforms or ITP platforms, okay, institutional trading platforms, that means my investors are mostly institutional investors. Okay. So, to attract institutional investors, there is a platform in which all the institutions come and look for companies to invest. I have put my equity instrument on that institutional trading platform. Okay. In which case I call it as institutional trading platform. SME means you and I can also go and buy SME stock, where an individual, a small participant can also go and buy those SME company shares. But in institutional trading platform, you and I cannot go and buy shares. Only if you are an institutional buyer, or that means you are an institutional investor investing in small cap companies or decent sized cap companies. In such case, you call it as institutional trading platforms. Okay. In these two places, if my equity instrument is listed, then it's a different story. Okay. So, in all of these cases, Ind AS is applicable only here, is mandatory. Okay. Here in these cases, Ind AS is optional. Ind AS is optional. Reason is very simple. Reason is very simple. Here the intention is to ensure all the large corporates are under Ind AS. It's not that just because you are listed doesn't mean you are a large corporate. Okay, only large corporates should adopt Ind AS. SME, you are getting listed only because you want visibility in the platform, in the investors network, for which reasons you are going to get listed there. Okay, but when it comes to these companies which are getting listed in this ITP and SME, don't tell everybody is large corporate. Okay, So the differentiation should be understood here. Hence, it is important that I don't compel Ind AS to be adopted by these small entities. Or apart from these, there could be private companies which also put their non-convertible debentures or non-convertible preference shares in similar platforms. These also cannot be considered as large corporates. Okay, so these are various things which you should be looking at from listing perspective. Am I making sense, people? Please confirm once. You can unmute and talk. It's okay.
Yes, sir.
Others?
Yes.
Okay, cool.
Yes, sir.
All right. Thank you. Now, let's go to banking company. Okay, banking company is fairly simple. Banking company, which is a bank as per Banking Regulations Act. Banking Regulations Act will tell whether a company is banking company or not. Same way with respect to insurance company. Okay, you have something called as Insurance Act that will tell whether a company is an insurance company or not. Then you have NBFC. Here again you have two people defining what an NBFC is. Number one, RBI defines what an NBFC is, and then there is also Companies Act 2015 rules, Companies Act rules, in fact 2015 will tell you what a NBFC is. Okay, so with respect to RBI, the rules for NBFC are very simple. The rules for NBFC are very simple. Out of the revenue, if your revenue is 50% or greater than 50% from financing activities, you are considered as a NBFC. Second, assets. Out of your assets, if 50% or more are financial assets, you can call yourself as a NBFC. That's all. Only two categorizations, important categorizations. Rest all, there are few set of conditions which it has given. All those will form part of your RBI categorization. Okay, but from Companies Act rules, there are multiple types of NBFCs which are included. So NBFC, it says core investment company. Okay, then you have mutual funds, asset management companies are considered as NBFCs, and then stock brokers are considered as NBFCs, like this. Nidhi company, chit fund company, all these are also considered as NBFCs. Now, out of this, one important understanding for you is what does a core investment company mean, is something which you should understand. Core investment company means I have an entity, my entity's operations itself is to invest in another entity, in which case I call it as a core investment company. I'll give you a good example. Apollo Hospitals. Today Apollo Hospitals is a large chain of hospitals in India to some extent. It is South India, it is predominantly visible. These Apollo hospitals, once they have become large, what they have done is they have created a core investment company called PCR Investments Limited. This is the corporate structure they have formed. Under this PCR Investments, they have Apollo Hospitals Limited, Apollo Hospitals Enterprise Limited, AHEL. They have some other entities like Apollo, pharmacy. Then you have something Apollo Life Sciences, Apollo Cancer Specialty. Like this, there are varieties of hospitals which are built under one umbrella. Under one umbrella, that is the core investment company. This core investment company is also considered as an NBFC. Is what? your Companies Act rules 2015 talk about. Okay, so these are varieties of companies which you should be looking at. Okay, so with this, let's hold it here for today's discussion. I think it's okay, and in tomorrow's session, let's continue with the rest of the topic and take it forward from there. Okay, thank you so much for patient listening. Bye bye.